Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning, as usual, on April 4th. So obviously it's been an eventful week. We actually saw support the first 3 days of the week, but obviously the tariff news is the biggest news of the week and really of the year so far, and the market's been cascading lower, obviously on Thursday, and so far today on Friday, okay? So a couple of thoughts, and we're going to get in the charts and just kind of talk about a few different things. First of all, I would just say that, going forward, but also just bigger picture, you can't beat the primary evidence. I always come back to this, especially when times are tough. If you're sticking with the market's trends, the action of leading stocks, you don't know when you're going to get a meltdown like this. Some things kind of start to correct, obviously, and the market stops and comes back to new highs. But, in February, there was the trends turning down, leading stocks really getting hit hard. I mean, down 30, 40% in, 2 weeks, that sort of thing. Just really abnormal action. And if you just follow along with that, no system's perfect. I'm certainly not perfect, but you're going to be defensive when these things happen and be back in when the market gets going. So just stick with the primary evidence right now. I know there's tariff talk. I'm sure there's going to be rumors and tweets and all this stuff, but just stick with what's going on with the market. Now, with all that said, I do think short term, listen, the news is out. It's very obvious, and we're starting to get some legitimate, and I'll show you one of them, sort of signs that okay, we might be getting near a low here, whether it's the low or a low. We'll see how it plays out, but there's tons of stocks hitting new lows. It's very emotional out there. Big gaps to the downside. China retaliates. Doesn't mean it can't keep going. I'm not saying today's a low or Monday. There's no predictions here. But I would just say that, the intermediate term sentiment pendulum, so to speak, has gone from, jubilant last November, December to maybe a little, complacent in January, February, to somewhat fearful a month ago, to now it's kind of like, oh my God, recession, no profits. Everyone's starting to discount some of the worst case scenarios. So just kind of keep an open mind. My antennae are up for possibly some sort of low here in the days ahead. We'll see how it plays out, okay? And just before I hop in the charts, just real quick, I've been here almost 26 years. The reasons are always different. I know now it's tariff, which is different, but you know what? The pandemic was different. Inflation was different, at least over the last 40 years, the most recent bear market. Terrorism, housing crash. It's always a different reason, but the market, kind of acts in a certain way. And if you have a system that puts the odds in your favor, which we do, it's going to keep you out during the bad times. It will get us back in during the inevitable next uptrend where there will be a lot of leaders. So just keep your head, out of the sand. Right now, obviously be defensive, stay safe. I'm not one to catch falling knives, but keep your eyes open to it because there will be an uptrend down the road, whether it's in a few weeks, a few months, somewhere in between. We'll see how it goes. Okay, let's hop into the charts. As usual, I'm going to start here with Market Surge, which is a product of Investors Business Daily. You can learn more at marketsurge.com, okay? So we'll just run through the major indexes as we always do. And there's just not much to say, obviously. This was the break right here of moving averages. If you want to wait a few more days for this, the break of the 19,000 level, you could do that. But clearly the market's been in a downtrend here for many, many weeks. To be honest with you, I was surprised. Usually the bounces after you kind of get that sort of initial wipeout, usually the bounces last 2 to 3 weeks, and then maybe a few weeks later you get kind of a retest, which may or may not hold. This rally really only lasted 8 days in total, and really it was only honestly a couple of good days in total before we started to melt down again. Obviously, as I just clear up this chart here, obviously, here's what we see here. I'm recording this around 11:30 in the morning, Eastern time. So we just kind of get this meltdown here. We're kind of back toward the August lows in most of the indexes. When things get emotional, I'm never a big guy with support and resistance on indexes because they're very widely followed, which usually makes them less meaningful, believe it or not. But especially so when it's emotional. I mean, people are going to have this level and that level. Well, you know what? When somebody wants out, they might get out and just the market falls an extra 2% or something like that. So we'll see how it goes here. Mondays can be tricky after you kind of get this big Thursday, big Friday decline. So we'll just see how it goes. But obviously we're in a downtrend until proven otherwise. So, we would stay safe. It's not too much different for the rest of the market. S&P 500, same sort of thing, kind of getting back toward this. I'm sure a lot of traders are looking at this sort of August low from, that's when we had, I think it was the Japanese yen or whatever. We had this sort of brief, very short, sharp meltdown here. Okay, but clearly in a downtrend. Looking back, the way our intermediate term measure works is we basically want the, which I said last couple weeks ago, we want the most indexes to be above where they were 5 weeks ago, 25 days ago. So, obviously at this point, 25 days is something like back here. So it's going to take a little time, but, a couple of weeks from now, we'll be dropping off stuff in this range. So we'll just see, if we can get some sort of big spike back, just starting to play scenarios going forward in my head, say the Fed cuts rates or trade deals go through, deals go through as opposed to tariffs or whatever, and the market can kind of repair the damage from there. Okay. You just run through the rest. This is small caps, they're a mess. Mid caps, they're a mess, so on and so forth. Okay. And conversely, just kind of what you'd expect. XLP, now it's getting hit today, but this is consumer staples. It's not strong per se, but it's certainly holding up a lot better than the overall market. Utilities, again, getting hit today as kind of everything is kind of joining the party today, which I'll get to in a second here. But utilities have been certainly holding up better. You can see the relative strength line holding up. So move into defensive stocks, okay? I would say a ray of light, just kind of getting past the indexes. We'll see how it goes, but this is the 10-year note. A lot of this is because of the, worry of recession and stuff like that. So if the market heals itself, I would expect rates to kind of snap back higher. But the bottom line is we are in a downtrend for interest rates. Eventually, that's a good thing. I don't know. Now the market thinks the Fed might cut rates. Who knows what happens on that front? But I would just say on the interest rate, monetary, whatever you want to call it, there are some tailwinds developing, that eventually help. I'm not saying maybe they don't help for 3 months. Maybe they start helping later this afternoon. We'll have to find out. But it is a background positive to see, clearly in a downtrend here with Treasury rates. Okay. Let me try to hop over here, talk amongst yourselves. Boom. We're going to go, I wanted to show you this right here. This is from stockcharts.com, by the way, so free site, you can use it. We subscribe to it so we can get 20 or whatever years of data. What we're looking at here is it's just a histogram basically of the number of new lows every day going back, I don't know what this is, 10 or 12 years, 10 years, I think, 10 and a half years. On the New York Stock Exchange. So every day, how many stocks on the New York Exchange are hitting new 52-week lows. Now today is not on here. It's updated once a day, but just take my word for it as I record this, or before I started recording. There was about 850 stocks today on Friday that had already hit new 52-week lows. The blue line you see there is a 1,000. Now it's not like it can't go to 2,000, which it did during the pandemic crash. Okay, and in 2008, there was many, many, many days, obviously, in the fall and winter and into 2009, where new lows got, super big. In fact, there was one day in October that year, not to go on a tangent, where 88% of all stocks on the New York Stock Exchange hit a new 52-week low. So that's extreme. But why am I bringing this up? Usually when you get over 1,000 new lows, again, I'm not an oversold, buy the dip, buy the falling knife guy at all. I'm a trend follower. But I also don't leave my brain at the door. And usually when you get over 1,000 stocks on the New York Stock Exchange hitting new lows, like I said at the outset, time-wise, you're probably getting close to a low. Maybe that low eventually fails, but you're basically getting to a point of panic selling, okay? So let's see what happens. Now, maybe it goes 850 today, 1250 Monday, 2,000 on Tuesday. I don't know. It can accelerate higher if the panic continues. But the point is that we're not, time-wise, we're probably not in the third inning of this sort of decline here. It's probably, getting kind of emotional, like I said. So it's just one measure. There's other measures too that, sentiment-wise and oversold-wise and stuff like that. And obviously, if we have a few more bad days, those are going to get extreme too. But this is just one that we've been watching. It's our 2-second indicator for years. And just over 1,000 new lows. As you can see in this chart, this was 2015 and the 2016 low. You had the late 2018 low, obviously the pandemic crash. Then you had a few different times during the 2022 bear market where you had 1,000 new lows, but each one was near, like I said, a low. It doesn't mean it's the low and we go kiting higher. That would be nice, but it usually finds a bottom in the market for a few weeks anyway, if not a lot longer, and goes from there. Okay, so just something I'm watching. And something you can watch along too if you track the number of new lows, okay? But let's hop back into Wanda here Okay, now we're back. The other thing I wanted to mention, this is just kind of an aside, and this is, if you're in a lot of cash right now, there's not much to do, okay? So we're just kind of trying to look ahead, develop scenarios in your mind so that if it does happen, you're ready for it. One thing that can happen, let's be optimistic and say, hey, the market's near a low, and then we're going to retest it 4 weeks from now, and then we're going to have a whole new bull market. Let's just say, okay, let's go into the weekend happy. This is NVIDIA. One thing you'll often see is these stocks will kind of undercut, kind of like we're seeing with the August low with the major indexes, which this is what this was for NVIDIA. They'll undercut lows from many months ago. They'll hit maybe they might hit a new yearly low. And what that kind of does is sort of reset the advance. Now, I mean, if the market goes down far enough, you can kind of consider everything to be reset. But usually if you take out that low and then kind of snap back above it and start to build, you might have something like an NVIDIA, which has really been stalling out since last summer and hasn't been a leader since last summer, can round out and can come back. The overall correction in something like NVIDIA is, right now where it's 38%. That's not pleasant, but that's not totally abnormal, especially for a stock that went up however the hell much it went up there the last couple of years. So this is just, some of these names you want to keep an eye on that haven't fallen, 70%, that are just totally broken, have real sales, real earnings, obviously are institutional quality, and just see as they approach some of these like August lows, or it might be some prior lows, do they kind of plunge below them, and then can they snap back here going forward? If so, on good volume and all that. If so, I'm not saying it's a buy, but it might be something now the next step is, okay, maybe this is now on my watch list. If the market does turn up, this looks like it's kind of reset its overall advance, that sort of thing. It's just something I'm looking at, especially with a lot of the chip stocks. You can kind of see it with the overall chip sector, which looks ugly here. This is the SMH. It's clearly taken out that low, so there's nothing to do here. But I'm just saying, if we start to snap back here, it might start looking a little bit more like a shakeout. So some of these things could be resetting advances, so we'll see how that plays out, okay? In terms of stocks, one thing just to go to, I'll just use the QQQ, and I wrote about this in Cabot Growth Investor. Of course, things change so rapidly, but clearly, as the market starts to make intermediate or swing highs and lows, okay, you can start to compare stocks that are kind of in gear with the market. They're moving down and up and down with the market, but they're maybe hitting higher lows or not. Maybe a stock would be down here. It's a little bit of a lower low, but certainly a hell of a lot better than what we're seeing with the S&P and NASDAQ and stuff like that, okay? So, of course, good stocks can go bad in a hurry in a bad market, but just running through some of this is kind of as close as you're going to get. This is TG Therapeutics. This might be the best looking growth-oriented stock out there. Usually when there's only one or two good looking stocks, obviously it's a bad market, but it's usually a little too obvious. But so far, the stock is holding above the prior basing area. I think this spike here was a competitor. I think Roche had not a great clinical trial result for a drug that would have competed down the road anyway. So the stock is holding up well, sales, earnings, some sponsorship. So hopefully this could be a future leader, but we'll see how it goes. Just before I get into some other good looking names, I just want to say this is like AXON Therapeutics, AXSM, which I had mentioned. And, still it had, it was earlier stage. It spiked up recently. It was holding up well, but then they came in, and I'm sure there's been some news. I know there's been a little news. But the stock hit 130. This was the top of the most recent rally phase for the market. And here it is down near 100. So a lot of stocks that look good, they look good, and then splat, okay, in a bad market. So that's why it's like if you do buy, keep it really small or just keep it on your watch list, okay? TGTX was one, Penumbra is another one, PEN. This one's had sort of a classic kind of a romance transition reality thing, which I'm not going to get into right now. But it's been an overall uptrend. And just looking at this right here, which is kind of a little micro, but this is 6 weeks in to a very normal looking consolidation so far, especially given the market. Okay, I mean, this is very, very well controlled. It might be something that you would expect to see a year ago. If the market was a little bit wobbly, the stock consolidates for whatever reason, it certainly doesn't look like the disaster of the major indexes. So PEN certainly a decent looking one. There's a lot of the medicals in here. This is Crystal Biotech. Now, not great. I mean, you can see it's slipping right here. So maybe this is going to fall apart. But overall, well off its lows from, January, February. And just as in this kind of bigger, it's already kind of had its correction before this. So maybe not. Maybe this is a sell, but to me, this is still something that I keep a distant eye on. A couple of good days, and this thing's back up near resistance. Let's see. Oh, GH, Garden Health. This one's tricky. It doesn't make money, and the sponsorship is it doesn't seem to be the best because the stock just moves all over the place. But ever since this low, which was a major low back in the middle of last year, you can just see it had this big volume clue or volume cluster, came back down, but at a higher low. Then it really reacted well to earnings and had a nice run. But, some big pullbacks in there. Then you have this kind of sloppy consolidation in here. Again, it's about, I'd say about 8 or 9 weeks long at this point. But the big thing I'm cluing off of so far is here's your low in early March, okay, with the market. Then we rallied up right for a couple of weeks, and now we've come right back down. But in the market, we're down here or whatever. GH is holding up pretty well. So that's definitely showing some relative strength there. Insulet, which is diabetes pump, the Omnipod, obviously getting hit here the last couple of days. But again, the market is kind of like down here. And here's this stock, A, holding the 200-day line, which is better than 3/4 of stocks out there, by the way. B, a little bit of a higher low, that sort of thing. And again, this is another name that it kind of already went through the ringer for a while. So I'm not saying it's, first inning, but it's not like it had just gone up fourfold in the last year or two, and there's just been overloaded with buyers that need to get out, okay? Roblox is another one. Again, this is just kind of the best of the worst, so to speak. It's gotten hit here the last couple of days. But, not really, no volume. We'll see how volume comes in today. Above the low from early March. To me, this is definitely, you can just see the relative performance line is definitely trending up. So far, so good. If it comes in next week, it's down 10% on Monday, maybe not. But so far, the longer it can these things can hold up while the market's doing what it's doing, the better, okay? The next step with some of these things is just to see if the market hits a low today or Monday or Tuesday, is to see a strong, big volume rebound, maybe back above the 50-day line or something like that. Again, it doesn't mean it's a buy, but these are the kind of the breadcrumbs you're looking for during the decline, okay? AXON Enterprise, I'm not going to lie to you. I don't think this is a great, it had a big run. This certainly is sort of a double top breakdown on big volume, which often has, not always, but often has longer term connotations there. But I will say the stock has been showing some relative strength. It is above the 200-day line. It's not dying here. Again, the selling volume's really been kind of drying up here. So it's just one that I'm keeping an eye on. I do think this is going to be some tough resistance to get through, but it is a great story. And, let's just see, I'm kind of putting more weight on the relative strength at this point because, if the stock wanted to cave in, it could in this environment, but so far it hasn't. And then a couple others. One is, so this is Rocket Mortgage. This is not a typical chart I'd look at, but we looked at interest rates really coming down. Maybe the market now thinks the Fed might cut, 3 or 4 times this year. Who knows if that's true. Overall, this is below the 200-day line, so that's not something I'm going to touch. But they've made some acquisitions. They've made some moves. What's interesting to me is in recent weeks, it's had 3 total down weeks during this mess, which is kind of interesting, whereas everything else has had 3 maybe up days. This has had 3 down weeks. And the stock has really found some big volume support this week. And it makes sense. Maybe you finally get some refinancings or something like that. So we'll see how it goes. There's some news in here, but if the market can rally and maybe rates perk up a bit and this actually does go up, it could be an interesting off the bottom name, okay? And last but not least, I wanted to mention, this is back in the resilient one. This is Halozyme. This one's kind of had a history of counter trending the market a little bit over the last few years. Not like it was going down all the time when the market was going up, but it was kind of very resilient in 2022 before it fell off. It did have this run here, and it's been a little sloppy, but again, you kind of have, I'm not going to count this out, but say it's 10 of 11 weeks up or something like that. It is coming in now to the 50-day line on the daily chart. You can see here, but obviously a lot stronger. And even if you looked at, where it was kind of a few weeks ago, it's above there. So HALO is one to watch. So when it comes to the market, again, I just, I'm not trying to whistle past a graveyard, or it's painful, the news is there, everyone knows about it. And for all I know, this could keep going. Maybe the trade war goes back and forth and the market keeps going down. But at this point, we're down about 20% in the NASDAQ, kind of straight down here. There is a lot of panic. We're down toward these August lows. So let's just see how it goes. Eventually, we're going to get a bottom here. What's likely to happen is some sort of rally, like I said before, 2 to 4 weeks. Then we get a retest 4 to 8 weeks after the low. This is the traditional pattern. And if that retest has some positive divergences, some leadership has shown some great relative strength, and then we get some good news and the economy, the Fed cuts rates or whatever, and the market can get going. We'll just have to see how it plays out. Right now, obviously the trend is down, so just stay defensive, mostly in cash, whatever that means to you. We're about 88% cash now in Cabot Growth Investors model portfolio, which is a ton historically for us. But whatever it means to you, just stay defensive, but just stay alert too, okay? The decline is very obvious. The reasons for it are obvious. We're seeing some of those things like the new lows getting very historically extreme, not just higher than they have been the last year or two, okay? And if that continues, we could be putting in some sort of near-term low, and then we'll see how the market goes from there. Okay, that's all the time I have for today. Thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.